think, act, and prosper. You are now tuned into the Money Level Show.
Jeffrey Christian, glad to have you on the show.
Glad to be here. Thank you, Daryl.
Yes. So I've been watching your material for a while, and you've been doing this work, you've been doing this research work for a long time, since the early 80s, correct?
Well, 79, I started writing about precious metals and copper closely. Before that, I was writing about energy markets and electric vehicles. I wrote a book on electric vehicles in 79. And the first thing I ever wrote about oil, I guess, was in 1975 when I was in university. So I'm, months away from my 50th anniversary of writing about this garbage.
Wow. That's a long track record, and I don't think people I can't speak for everyone, but a lot of times people are in these echo chambers of like very bullish, very everything gold, everything metals, and which I understand like some of the arguments for that, but I mean you've been doing this for a while, so I'm sure you've seen these cycles of hype and you look at the data to see to make an objective assessment of what's happening in the metals market.
Yeah, one of my critics told another guy, don't debate Jeff Christian. He brings a bunch of facts and statistics along.
Oh,
yeah, that's the way it is. Yeah.
Wow. So I wanted to bring you on because for me, I think that this is educational. I view my channel as I'm walking along a journey with my audience. And so even though I may bring different guests on that have different opinions, we have to hear both sides. We have to hear information from all sides of the spectrum, right? And so, and I think that that's just an investment, wise as an investor. And so I wanted to bring you on because I believe some of your content, I was watching your content last night, and just it challenges some of my views. Oh, I didn't think about that. Oh, he's bringing the charts, right? And so, and I didn't just get defensive. I just got more curious, versus getting defensive about oh, well, I'm bullish gold and for these reasons. So I wanted to jump into the gold buying by central banks. You had showed some amazing charts on your channel, which I'll link to in the description below, regarding central banks buying gold. And that's something that I've been talking about a lot and everything. And I mean, when I read, articles and stuff, but I want to get your assessment on okay, how much of a factor is this in gold price movement, as well as just the or is it a lot of hype? So I just want to get your assessment on that.
The answer is that it's important. It's not as important as maybe some people think, and I'll get back to that in a sec. But there's a lot of hype that's been attached to it in the last, I don't know, year and a half or so. If you look at its importance to the gold price, because that's really what we care about. Investment demand from private sector entities, individual investors all the way up to sovereign wealth funds. Investment demand is much more important to the price of gold. And it partly that's because investors are less price sensitive to gold prices increases. So they'll chase the price higher. Central banks, generally speaking, are more cautious, and they tend to be more value investor oriented. And so when the price starts rising, they'll pull back. And you've seen that over the last 6 to 8 months. As an example. So it is important, and central banks have been buying gold on a net basis since 2008. They buy about 10 million ounces a year on average. When the price is down, they might buy 20 million ounces. When the price is up, they may buy 5 million ounces, but they are buying. Now, it's important to understand, you're talking about maybe well, like last year, I think it was 20 central banks bought gold and 21 in 2022 bought gold. So it's not 180 central banks buying gold. It is a subset of them, although some of them are pretty important. Reserve Bank of India, the People's Bank of China, the Russian central bank has a special place in the world, but it's been in there too, as has the Central Bank of Turkey. So it is important. It's not the deciding factor. There's also been some misestimates of how much gold is actually being bought. It did not spike up to 22 million ounces in 2022, the way some people say it did. It was closer to 10 or 11 million ounces in 2022. So it is important. And it's probably going to continue. And it serves as a good base. And as I said, central banks are value investors. So one of the factors that's important to know is, when the price comes down, central banks step up as buyers. So when investors didn't want gold in 2013 to 2019, and the price went from $1,800 an ounce down to $1,300 an ounce, central banks were buying a lot of gold. When the price started rising, they pulled back some. But so one of the functions of central banks is they serve as to help create a floor for gold prices. The second thing, which is related to that, is their price elasticity changes with the world. Unlike a lot of gold investors that you hear about on the internet, when conditions change, when prices change, central banks change their opinions. So one of the interesting things that we've seen is when the gold price came from $2,040 in the first quarter of 2022 down to $1,640 in November of 2022, a lot of central banks, including the People's Bank of China, started buying. These were central banks, in the case of People's Bank of China, they had stopped buying when the price got over $1,350 in 2019. In 2019, the middle of 2019, they had not bought any gold from July 2019 until November 2022. When the price came down to 1640, they said, okay, it's not 1350, but it's off 20% from where it was 8 months ago. And this may be the new floor. So the People's Bank of China and other central banks stepped up their purchases in November of 2022. And if you look at the gold price, that's when the gold price stopped falling. So they help form a base, and that base has moved up. Those are probably the two major takeaways regarding central banks in the gold market today.
Mm-hmm. Okay, thank you for that clear assessment. So what is the reason behind central banks buying gold? So like we get a lot of talk about de-dollarization, a lot of talk about the BRICS forming, and and all of that. I remember last year because I had met you briefly at the Rule Symposium. I had made a comment. I said, hey, I like your views, even though you're viewed as a contrarian, and we were in like this. It was just really quick in passing, but there was a lot of talk about, the BRICS were going to establish the gold as their currency. You need to buy now. You need to buy now, and then obviously that did not come to fruition. And so I'm like, okay, well, how do we make sense of central banks buying gold? Like, are they buying low to sell high? Are they what are they trying to protect there, or is this something that's just always happened? I mean, I don't know about the U.S. the U.S. reserves or whatnot. We can get into that a little bit later or something. But what is the reason behind it? Time out. Quick break in the action. This message is brought to you by the Rule Symposium. This annual symposium is hosted by the legendary investor Rick Rule himself. It will take place from July 7th through 11th in Boca Raton, Florida. Mr. Rule invites some of the most brilliant minds in macroeconomics and natural resource investing. This year, featured speakers include Danielle DiMartino Booth, Nomi Prinz, Jim Rickards, Grant Williams, Lobo Tigre, and more. Rick even organizes the Living Legends panel, where he invites individuals who have built billion-dollar businesses from scratch. Attendees will be introduced to a myriad of companies active in the natural resources space, with the companies invited being the ones that Rick Rule invests in himself. The symposium is held at the Boca Raton, which is an amazing resort with exceptional amenities. I attended in 2023 and thoroughly enjoyed my time there. I went on an amazing cruise with Rick and other investors and CEOs of companies, and even had the opportunity to test drive an Aston Martin for the first time. So don't miss out on this opportunity to have fun and receive high quality education to help secure your financial future. Click the link below to sign up, and I promise you won't regret it. But if you do, Rick offers an amazing money back guarantee. So what are you waiting for? Click the link below to sign up today. Now, without further ado, let's get back to the content.
Yeah. We'll talk about the bricks in a second. I'll just give you an example. One of the things that we do at CPM Group, which is very important, is we go to the root documents. And like I've gone to conferences and people say, well, CPI is a bogus number, blah, blah, blah. This isn't an accurate measure of inflation. And you say, do you know what the CPI even is or how it's created? Do you realize there are several hundred economists? These are not partisan economists. These are economists who want a good job at the Federal Reserve Board. Well, not with CPI. It's not the Federal Reserve Board. It's the Bureau of Economic Analysis, I guess, or Bureau of Labor Statistics that calculates CPI. These are people who don't have a bias, who want to do a good job. And they run a survey. And they take a survey of several thousand households that voluntarily keep track of everything they buy every month and what they paid for it, and send that information in where it's compiled. So, when these people who don't know what they're talking about say, oh, blah, 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 CPI is bogus, these guys just make up these numbers to show low inflation. This is information that's culled from the actual economy. And it's an index of a survey. It's not a census. They don't ask everybody in America, what did you spend your money on last month? It's not, it's a survey, and it is a very accurate measure, And I will bring one of the monthly reports. It's about 65 pages long. And people say, well, CPI is bogus. I think, here's the CPI report from last month. Have you ever read one? Or a better example, our good friend Ron Paul, who, on his way out the door, having spent from like the 1980s until 2008, sitting there in Congress saying somebody audit the Treasury's gold, or I think he called it the Fed's gold. It's actually the Treasury's gold. And then on his way out the door, his colleagues let him hold a hearing. And his opening statements were, well, in preparing for this hearing, I realized that the Treasury actually does have an independent audit by KPMG every year of its gold. And it just undertook a bar by bar review and assayed samples and had the assays tested, and they checked off each bar in the 261 million ounces. And no one ever told me that. Well, you know what? The annual audits by KPMG are posted on the internet at ustreasury.gov. And so is the full report of the detailed bar by bar audit. He just never looked for it. CPM Group looks for the audits. So right now you have this garbage in the market about the Saudi American 1974 agreement to use the US dollar to buy oil has expired June 8th. And therefore Saudi Arabia is going to stop using the dollar to buy oil, sell oil, and the dollar is going to collapse. The first thing we do is we go online to the US Secretary of State Department, and we get the 4-page document. And in that 4-page document, the word oil, the word dollar, and the phrase oil pricing do not appear. It's just like bogus. It's just total bogus. So one of the things that we do, and one of the things that everybody should do, is go to the right parts of the internet and get the good stuff and go to the source material. When data comes out on unemployment or inflation or anything else, the first thing we do is get the actual report and look at what the data says. We don't listen to the pundits on the internet or CNN or any place else first. We might listen to them later to hear what they're saying, but the first source of our information is the raw data. And I think that's very important there, you know. Now, in terms of the BRICS, if you read what the People's Bank of China, the Reserve Bank of India, the Reserve Bank of South Africa, and Banco Central do Brasil say, and even the Central Bank of Russia, none of them talk about a gold-backed BRIC currency. Vladimir Putin does, but the Central Bank of Russia doesn't. And neither do any of those others. What the People's Bank of China and the Reserve Bank of India say are the gold in China stays in China. We're not going to use gold for trade settlement purposes. You know, if you want to, if you want to sell us your oil or your natural gas or anything else, we'll pay you in dollars and euros and other currencies. We're not going to pay you in gold. The gold in China stays in China. Reserve Bank of India's had a spotted thing. They used to hold gold and they sold some, and now they're buying it again over the last 10 years. And they say, we're rebuilding our gold reserves. We're not getting rid of it through trade settlements. Brazil has like 6 million ounces of gold. It represents like 6% of their monetary reserves. It's too small to be used for trade settlements, and they have no desire to get rid of it. And South Africa has about 6 million ounces of gold, and it's probably about 12% of their reserves. And they have no desire to get rid of it, and it's too small to be useful. And Russia right now is using its gold to pay for its economy, to support its economy and the war effort. And the Central Bank of Russia does not talk about a gold-backed BRIC. The only person in the world, other than gold promoters, that are talking about a gold-backed BRIC currency is Vladimir Putin.
Wow. Yeah, I'm glad we're having this conversation because, to be honest, like, you know, I haven't like necessarily looked at the fine print of a lot of the documents. I mean, when it comes to like the BRICS and such, and so oftentimes people are relying on other people to do the research for them, and they listen to whoever they feel has done the research, and you know, obviously that builds like these camps and everything, right? And so I'm glad that you're bringing that, and I'm glad CPM actually does that due diligence. And then it's also one of those things of like, okay, what should a retail investor be focused on in this type of thing? Like for me, like I don't have the time to like research everything about the BRICS. That's not like something I'm trying
Yeah.
you know, and that may warrant like me not necessarily, you know, speaking on it if I don't understand it, you know what I'm saying? So I think that's really important points. For a retail investor who, I mean, many people on my channel, they buy gold, invest in natural resources and such, or just want to know about markets and macro. What should we be looking forward to in terms of like gold demand, gold movement this year? So obviously we see that gold is a lot higher than what it was, you know, in the early 2000s. Are we at the point of no return with the price of gold? I mean, we've been broken above 2,000 for a while, and so I'm wondering if that's going to stick. You know, obviously, if we have some type of market downturn, it can go down significantly for liquidity. But yeah, what's your take on that?
Well, the thing that drives gold prices is investment demand. And the thing that drives investment demand is not so much gold supply and demand. I mean, gold fundamentals are important in the model, but what's really important are economic, political, and financial conditions. You know, what's inflation, real GDP, cost of the household earnings, household savings, the certainty or uncertainty in currency markets, the certainty or uncertainty in overall economic conditions. You know, gold investment demand feeds on uncertainty, inflation and currencies and stock market and bond markets and overall economic conditions and unemployment. All of those things are factors that can generate high degrees of uncertainty on the part of investors, leading them to say, I should own more gold. In 2000, gold price, as you said, it was like $260, 250, $270. And we issued a buy recommendation for gold, saying that the gold market was moving into a gold renaissance, that the investment demand curve was going to shift higher, to speak in economic, meaning that more investors in more parts of the world would spend more money buying more gold for a longer period of time than they had in the past. And they have. Since 2002, the investment demand curve clearly shifted higher, and investors have been buying consistently more gold. And that's because the world has become much scarier since 2002. You had the tech stock bust, the NASDAQ fell 86% in 2001. You had 9/11, you had a variety of other things. Then we attacked Afghanistan, and then we attacked Iraq, and OPEC started raising the oil price very steadily from $10 a barrel to $140 a barrel in 2008. You had all kinds of uncertainties, and in that kind of environment, investors were buying more gold, and they drove the price from $260 in 2000 to 1,800, 1,009, almost 1,900 in 2011. It's that uncertainty, and that's what you got to watch out for. So from a long-term perspective, CPM Group sees this gold renaissance. And back in 2000, we said it starts with investors, and later central banks kick in. And central banks became net buyers in 2008, and they have been consistently net buyers ever since then. So you've got this upward shift in the investment demand curve and an upward shift in the official transaction purchases, net purchases at higher prices. That on a longer term basis will continue. Now, on a cyclical basis, we probably are within a couple years of a peak in gold prices, knock on wood. That depends on what happens in the political, economic, and financial environment. Our expectation is we'll see a recession, we'll see increased financial and economic problems, and the political problems domestically in many countries around the world and internationally will continue to and play a more prominent role in creating that uncertainty that drives investment demand. You saw investors buying 25, 26, 24 million ounces over the last 3 years on a net physical basis. This year, they're probably going to buy more than 30 or around 30 to 31, 32 million ounces of gold. So you've seen like a 25% increase in physical investment demand. And that's being reflected in the higher price. Our expectation is this continues into 2025, maybe even into 2026, but that at some point things get better, because that's what happens. One of the problems with the gold bugs is I'm looking for the collapse of the dollar, I'm looking for the collapse of the treasury, I'm looking for the collapse of society, whatever. Things tend not to collapse. You have a recession and then you recover. That generally speaking is how it goes. There's this outlier, but it's a very small percentage in your scenario planning. So our forecast that the gold price rises for the next couple of years, peaks, and then comes off is predicated on the idea that we don't go into World War III. We don't go into a Great Depression. The economic and political and social structures that allowed for the Great Depression don't exist anymore. There are all kinds of safety valves and brakes, unemployment insurance, Social Security, all these things that didn't exist prior to 1933, 34. So, we don't see collapse. We see it getting better. However, there is a higher percentage that the political environment poisons the economic and financial environment. You see, so in that environment, you expect the gold price to come off. And then you alluded to it, like when it comes off, how low does it go? Does it go back to 2000 or does it go to 1640? I don't think it's ever going to go back to 1350. I think it can go below 2000, but it might take a decade to get there.
Mm-hmm. Yeah, I can see that. So with the the risks, like, so you mentioned there, obviously you have a projection, but that's that's in case that a Great Depression doesn't happen, World War III. So there's risk out there, right? So I was wondering about how does, and this is going to be our last question. We don't have enough time to do Silver any due diligence in this amount of time, but so how does the government debt? So we do have safety valves in terms of like the unemployment insurance, Social Security, and such. But like the government, I mean, I guess we do access the money printers, right? But I'm just wondering, like money printers. But I'm just wondering in terms of like, how does the deficits and debt? How does this fit within the picture as well? Are you seeing anything there?
Yeah, they are problems, but again, I will tell you, when I started in this business in the mid to late 1970s, people were saying, look, we have a $50 billion deficit in the United States government, and we have 800, 900 billion dollars of federal debt. That can't be sustained. So now we have a $1.7 trillion annual deficit and $40 trillion of federal debt. And people are saying that can't be sustained. And it sure looks like it can't be sustained. But let's be honest, for the last half century, really since Ronald Reagan took over, we have had that kind of deficit spending that goes on and on and on. It actually started with Richard Nixon when he famously misquoted Keynes and said, "I am a Keynesian. I can have a deficit I can have a deficit to help goose the economy." That's what he said in 1968. And what Keynes said was, when you get into a recession, it's okay to have a deficit to help get you out of that recession, but then you go back to a surplus. But Nixon got us into his deficit, and we had deficits ever since, except for 4 years during Clinton's tenure as president. So, the sad thing in my mind is that the deficit spending and the debt could relatively easily be dealt with, but the political will on the part of politicians isn't there to do it. They have too much money they get in terms of campaign contributions and trips to Bali to upset that apple cart. And the political will on the part of voters isn't there. I mean, if you go back to Eisenhower, what I call the last true Republican president, and I say that in a good way, Eisenhower had a 91% marginal tax rate on the wealthy. And people paid it. And they voted for him twice. You don't have to go back to 91%. If you went to 40% marginal tax rate, you could start paying down the deficit and the debt. There are other factors too that could be done. The problem is that the political will to solve those things isn't there. And that's the biggest concern. And it's perhaps the biggest reason to own gold and silver.
Yeah, that is good. So yeah, because that's something I've been talking about with my audience. With the unfunded liabilities of the government, as well as the Social Security not being well funded. And it's like, hey, historically tax rates have been I think on average somewhere around 40-50%, and then the highest it's ever been was 90%. So taxes could likely go higher in the future. And so those are some of the things that I've been talking about with my audience, and like, what are some ways we can shelter our investments or whatnot. And so I'm glad that you mentioned that. So I think that that covers a lot of what I wanted to talk about today. Jeffrey, I appreciate you coming on, and we got to give Silver its due diligence. I did get a couple of questions from my audience about Silver, and we got to give that its due diligence. So we got to have you back on.
Well, if the last 50 years are any indication, I'm not going anywhere soon.
That sounds good. So where can people find you? And then I'll be sure to link to those in the description. But where can people find you?
Sure. Our website is cpmgroup.com. And there's a lot of free reads and free videos, as well as information about like our annual gold yearbook, our annual silver and platinum yearbooks, and other services that we charge for, research and consulting services. And you can send emails to info@cpmgroup.com saying, I would like to talk to someone at CPM Group about how you can help us protect our wealth or enhance our wealth using precious metals and protect ourselves from adverse price moves and while preserving the ability to benefit from positive price moves.
Yeah. Okay. Sounds good. Sounds good. I'll be sure to link to that in the description as well as tag your YouTube channel. You all be sure to go over there. Jeffrey's doing some great work. The team over there is doing some great work and great research. So thank you for coming on.
My pleasure. Whenever you want to talk about silver, just give me a call.
All right.